Well, good afternoon, ladies and gentlemen. My name's Stephen Cole. It's my pleasure to be the chair of Neometals. And on behalf of the board, I welcome you to the Neometals 2017 Annual General Meeting. And we're pleased that you've taken the time to join us today and attend, and we thank you for your support for the company. May I also pay particular welcome to the 20 plus people who are streaming through this webcast process. And this is international actually. We have people here from at least New Zealand and around Australia. So I think that's great. There's been a lot of talk in the recent past as to whether AGMs have lost their lustre. What are they actually, what's their purpose, what are they adding to the equation of the corporate governance calendar these days? And having written a couple of papers on it for the Australian Institute of Company Directors recently as to how we can enliven, we thought for a small company like ourselves, webcasting to our shareholder base and prospective investors was a great way of achieving that outcome, at least as a first step. And hopefully next year we might even get a little bit more interactive. Let's see how we go. But welcome to everybody out there in the ether. Can I take this opportunity just to confirm that we have a quorum present? And so I formally declare this AGM open. The notice of meeting has been mailed to shareholders on the Monday the 23rd of October, and with your approval I'll take it as read, unless you want me to sit here for the next 45 minutes or so reading it out verbatim, and I'll take it from the lack of objections to that, we'll accept that. Before we start the meeting, just a couple of housekeeping matters. If you do have a mobile phone, please turn it off. As far as any recording of the meeting, we'll leave that to our experts, and we'll leave our own recording phones and so forth in our pockets. I was at the Cat Stevens concert on Wednesday evening at the arena. I think half the people were just watching it to hold their telephones up to record the whole thing, and then was going to watch it when they got home. I think it's much more better if you can actually participate live and actually be part of the event. And I hope today that you will raise some questions. We are here to respond to questions and deal with matters as they come up. Just let me introduce your board. Chris Reid, our Managing Director and one of the founding directors of the company. David Reid, who most of you will be familiar with, Non-Executive Director and Founding Director of the company. Doug Ritchie, Non-Executive Director, who joined us during 2016. And Natalia Streltsova, Non-Executive Director, who also joined us in 2016. And at the far end is Jason Caroni, our CFO and Company Secretary. In attendance also are our representatives from our auditors in Mark Grover. We also have Computershare, who are the company's share registry. We also have some of our lawyers present, and we welcome them as well. The order of business, we'll go through the notice of meeting in the designated order. For items 2 and 6 on the agenda, I'll step out of the chair and let Chris Reid chair the items on those, as there is a prospective conflict of interest, because some of those matters are to do with me personally. And then I'll be taking the chair afterwards, I hope, unless you vote me out of office in the meantime. The other item I'd just like to mention, again, the notice of meeting, we will have a poll on the remuneration report. The poll numbers, which we'll be putting up on all the voting on the various resolutions, they will come up on the screen, but we do like to have a formal record on the remuneration report, having regard to the significance of that particular item. If I could move to my Chairman's address. Well, I think 2016-2017 was a very solid year for Neometals, and one in which its positioning as a globally relevant organisation in the lithium industry supply chain was consolidated well, and that's continued over the last 5 months since the end of the financial year. Key features of our current position include a 13.8 equity share in a globally significant mature upstream operating lithium project, Mount Marion, with future decades of production, with resulting dividend cash flow stream from profits derived from committed life of mine product sales, and with Neometals itself holding assured life of mine offtake rights and option arrangements for 12.37% of the lithium concentrate output from 2020, and that's to support our announced commitment to progress development of downstream lithium processing in Western Australia. We've got a 100% share of one of the world's largest and highest grade titanium projects at Barrambie in Western Australia at a time of escalating TiO2 commodity prices, and with process disruption being led by proprietary technologies within the Neometals portfolio of technologies. And we've got some defined plans to accelerate the development of this project with DSO initiatives into the Chinese market in earlier course to help generate some additional cash flow in the shorter term. We've got an impressive and diverse range of broader disruptive technology initiatives, including across the renewable energy sector, relevant lithium and titanium supply chains, with prospects of Neometals' patented technologies becoming instrumental in driving new low quartile production outcomes across a range of mineral processing applications. We've got a 42% share approximately in ASX listed Hannons, with some exciting prospective nickel, gold and lithium exploration interests. So that's progressing positively since we acquired the interest about 12 months ago or so. A market capitalisation now hovering in that sort of $250 million sort of range, with the share price around the mid-40s over recent weeks, and with around 37 million unrestricted cash on hand as at 30 September this year. And over the period in question, your company's board and management have worked cohesively together in their commitment to deliver shareholder value consistent with our strategic plan. To support the company's growth and expanding asset portfolio, certain key executive management team appointments have been made in Darren Townsend. Darren, just indicate yourself there. Darren's heading up the titanium area now. And with Paul Warwick, Paul unfortunately couldn't be with us today. He's had to take some special leave. And with more appointments projected to be made in the near term as well. In other words, the company's growing well and we're getting some good expertise to help support the executive team. Key principles of our strategic approach include strong governance, disciplined strategic planning, measured risk mitigation, innovation in our business approach, co-venturing with strong, relevant global partners, respectful stakeholder engagement, and a focus on sustainable shareholder value and returns. And I'm sure Rob Kempton will have some questions around that one as the day goes on. As for the future, with a wealth of resources, both minerals, projects, technologies, people and financial resources, and with the company's disciplined strategic and business planning approach, your board is confident that your continued investment in the company is sound and well-founded. Your board looks forward to continuing to serve you, its loyal shareholder base, and both support and hold accountable the executive team for the delivery of Neometals' strategic objectives. If I could now move to the formal part of the business. Just to mention, this is a shareholders' meeting and only shareholders and their proxies and attorneys and authorised reps are entitled to speak or vote on matters before us. And on registering, you would have received your various little bits of paper. If you've got a green card, it means that you can speak and vote at the meeting, and you'll use that when it comes to the poll voting on the remuneration report. I do ask, in the interest of the meeting, if you confine your questions to matters the subject of the business of the meeting and at the appropriate time within the meeting, remembering that Chris will be, our Managing Director, will be presenting his presentation while we count the poll and at that time, and that covers just about everything we're doing anyway, so virtually there's not much which is off bounds, just have it at the right time. I intend to put all items to a vote on a show of hands apart from that resolution 6 on the REM report, and we'll have the poll on that. So get ready to hold your green card when voting by show of hands, and to fill it out appropriately when we get to resolution 6. Before I put each resolution, the results of the poll of the proxies to date will appear on the screen, so you've got that information available to you. And as Chair, I intend to vote any open proxies I hold in favour of each resolution. So first of all, you all would have received the annual report for 2017, and the first item of business is to receive and consider the company's financial statements and reports for the financial year ending 30 June 2017 and the reports of the directors and the auditor contained in those documents. There's no voting on this item, but shareholders have the opportunity to ask questions about the company and its operations. As I mentioned, Mark Gover, our auditors, Deloitte, is with us today, and questions relating to the audit or the auditor's report, the company's accounting policies and the auditor's independence may be directed to Mark through me, the chair. Any questions in relation to the company's remuneration policies and practices, I'd prefer if you raise those when we got to the discussion on the remuneration report. So I'm happy to take any comments or questions you may have in relation to the financial report and the operations of Neometals in general. Is there any questions available from the floor? Next year, hopefully, we can have a bit more interaction with our people out in the ether, and they might be able to actually tap back and give some questions to us as well. So we're thinking of you next year at least. Are there any questions, please? If not, we'll table those and we'll move to the next item of business. Well, this item relates to my re-election as a director of the company, and given that I think I've got an interest in the outcome of this, I'll invite Chris Reid to act as chair of the meeting for this item. Chris, would you like to take the chair?
Good afternoon, ladies and gentlemen. Resolution 1 is the re-election of Stephen Cole as a director. The next item of business is Resolution 1, which relates to the re-election of Stephen Cole as a director of the company. In accordance with the company's director rotation rules, Mr Stephen Cole retires at this meeting and offers himself for re-election. Stephen's biography and qualifications are set out in the explanatory memorandum sent with the notice of meeting. I now move that Mr Stephen Cole be re-elected a director of Neometals Limited. Is there anyone who wishes to speak on the resolution? The results of the proxy votes have been tabulated on the slide behind me. I inform the meeting that as chair I intend to vote any open proxies I hold in favour of this resolution. I now put the resolution to the meeting as an ordinary resolution. All those in favour, please raise your green voting cards. All those who oppose this resolution, please raise your green voting cards. I declare this resolution passed. I will now pass the chair back to Stephen.
Thank you. And thank you all for your vote of confidence and support in that. Jason, can we just move on from that result there? Right, Resolution 2. The meeting is asked to approve the performance rights plan, which was originally established by the company in 2011. The plan was previously approved by shareholders at the company's 2011 annual general meeting and again at the 2014 annual general meeting, and needs to be refreshed on a 3-yearly basis. The company has amended and updated the performance right plan to better reflect contemporary trends in corporate governance practice, and also to allow for the participation of non-executive directors, subject to you passing that later resolution on this agenda. Performance rights plans and executive remuneration have been quite an active topic. You'll see in the media where some people are receiving reasonable-sized telephone book sort of numbers, and the structure of these plans has been the subject of quite a bit of commentary from proxy advisors as well. In the terms of that, we have been quite active at the Remuneration Committee to bring our plan, and this will be evidenced in the subsequent resolutions that are coming before this meeting, to bring it into a contemporary state. We have taken notice of what the market is saying on these matters, and we are responding to that. But this plan here is really to get things into the infrastructure framework so that some of these subsequent resolutions can then come through. The terms of the updated performance plan are set out in the notice of meeting and the accompanying explanatory memorandum, and approval of the plan will allow the company to issue rights as an exception to the company's 15% capacity under ASX Listing Rule 7.1, which says that the directors can't issue more than 15%, number of shares up to 15% of the issued capital of the company without coming back to shareholders. So this will mean we can still do 15% and also issue rights under the plan. So I now move that the resolution to approve the performance rights plan be put to shareholders. Is there anybody who would like to speak on this resolution? Yes, Mr. Kempton. Just one second, we might, is this microphone hooked up? Kelly, would you be able to run that thing?
Thank you. I just feel it's probably putting the cart before the horse. You know, there's a lot of things on the program, but just looking at the scale of the stock, it's sort of creeping up to where it has been in the past, and now it's and I thought wages was a part of a performance right anyway.
Yes.
That's about all I have.
Yep. If I could just respond to that, I chair the remuneration committee of the company. Executive remuneration, best practice at present, which I think is accepted best practice, is to have a base salary and then to have an at-risk component of salary in the form of short-term incentive benefits, probably used to call them bonuses, and then some longer-term incentive plans as well. This rights plan is to respond to that. It is really just the infrastructure for the plan, and when we get on to, say, Chris Reed's in 2 resolutions' time, the actual proposal for Chris's remuneration going forward, you'll see how that sort of manifests itself. So we do aspire to attract executives who've got the right calibre, the right quality and the right commitment to the organisation. We certainly are satisfied we've got that. We've benchmarked these salaries and our remuneration structure against what's regarded as contemporary good governance practice, with some advice from having regard to the advice coming through the proxy holders and so forth. So the board has done diligence on this and is satisfied that the plan is sound. Noting your comments though, and it is structured on the basis that there has to be performance. If there's not performance, then you get a base salary. So there's no giveaway here, and we do actually hold these to account. I think in last year's plan on one of those, Chris, what was your percentage of earn? 30%, yeah. We weren't quite satisfied that the performance was to the 100%, which is a very high aspirational level, and therefore on one of those incentives only 30% was awarded. So I think we've got the balance right, and we are quite rigorous as to its application. But thanks for the question. Yeah. Again.
No.
Oh no.
I'm voting on it.
Oh, you're voting on it now, right? Okay. We have to wait a minute now. Any other questions? All right. If there's no other questions, I'll put that resolution. We've got the proxy position up there. All those in favour, please raise your hand or your green card. Thank you. And those against, I declare that one. Thank you. So I note that, and declare that as carried. Next item is Resolution 3, which is the approval of previous grant of performance rights. And so on the 3rd of October 2017, we issued 1,214,027 performance rights to some of the company's employees under the amended performance rights plan that's been adopted by the board at that time and has just been refreshed under Resolution 2. And details of that issue were announced to the market on the 3rd of October 2017. As shareholders had not yet adopted the plan at the time of the issue, those performance rights were issued out of the company's 15% discretionary capacity that the board has under ASX Listing Rule 7.1. The purpose of this resolution is to ratify the issue of those performance rights pursuant to ASX Listing Rule 7.4 and thereby to refresh our 15% discretionary capacity in case we need to do a placement or a quick capital raising for the benefit of the company, not that any is currently planned at this stage. On that basis, I move that the resolution to approve the previous grant of performance rights be put to the shareholders. Is there anyone who wishes to speak on this resolution? If not, we have the proxy position on the screen. I now put that resolution to the meeting as an ordinary resolution. Those in favour, please raise your green cards. And those against, please raise your green cards. Thank you. I declare that resolution has been passed as well. Next is Resolution 4, the grant of performance rights to Chris Reid. And under Chris's employment agreement as part of his long-term incentive remuneration structure, the company has agreed to invite him to apply for tranches of performance rights over the next 3 financial years in accordance with agreed principles and subject to agreed performance conditions. The performance conditions are set out in detail in the notice of meeting, but in short, we've changed them. Previously, they were all just based off pure relative total shareholder return relative to other companies in a group of companies that we identified in the same industry. In short, these ones will now 40% will vest on relative total shareholder return, so only 40% rather than 100% against that comparator group of companies. A further 40% of those performance rights depends on the company's absolute total shareholder return on an annualised basis over that period. And the final 20% of the performance rights depends on fulfilment of certain strategic and business plan initiatives of which the Managing Director has the primary responsibility. So slightly more sophisticated, looking at over our first plans were over a shorter period. We've extended those out over a longer period before the vesting, and we've split the criteria between relative total shareholder return and absolute shareholder return, so that merely because the tide comes up we've also then got to deliver some absolute returns as well before we can award those rights. I move that the resolution to approve the grant of rights to Christopher Reid be put to shareholders. Is there anybody who wishes to speak on this issue? If not, I'll now put that resolution to the meeting as an ordinary resolution. All those in favour, please raise your green cards. And those against? One voting against. Thank you very much. So I declare that resolution as having passed. The next item, as I said, relates to the participation of non-executive directors in the company's performance rights plan, and given that I am one of those non-executive directors and all other members of the board are as well, in the interests of the outcome of this item, Chris will again take the chair for the meeting. Chris.
Resolution 5 is the approval of non-executive director participation in the performance rights plans. Shareholders are being asked to approve the participation of non-executive directors in the performance rights plan and any grants of performance rights in financial years 2018, 19 and 20 to any non-executive directors in office from time to time under the amended performance rights plans. The proposed inclusion of the non-executive directors to the company's performance rights plan is intended to encourage and help facilitate current and future non-executive directors holding a base level shareholding in the company. Non-executive directors will be invited to elect to be granted performance rights plans under the company's performance rights plan, by salary sacrificing part of their fees for their services as non-executive directors in exchange for performance rights up to a cap of 50% of their directors' fees. I move that the resolution to approve the participation of non-executive directors in the performance rights plans be put to shareholders. Is there anyone who wishes to speak on the resolution? The results of the proxy votes have been tabulated on the slide behind me. I now put the resolution to the meeting as an ordinary resolution. All of those in favour, please raise your hands. All of those who oppose this resolution, please raise your hand. I declare the resolution passed. I will now pass back the chair to Stephen.
And thank you for that support to the non-executive directors. If I could just make a comment on it, there has been in other circles commentary around whether non-executive directors having some skin in the game. This is really to encourage that a modest level of participation, but not to give bonus incentives, but merely to allow these performance rights to issue in exchange for surrender of cash that would otherwise be received by way of directors' fees. So in that sense, we hope to ensure that the whole board is fully aligned with the shareholders to deliver enhanced performance outcomes. Resolution 6 is the remuneration report. And this is a non-binding advisory vote on the adoption of the remuneration report in accordance with Section 250R of the Corporations Act. The company's annual report for the financial year ending 30 June 2017 contains a remuneration report. It's a riveting read, I'm sure you'll agree. The report sets out the remuneration arrangements for all directors and certain other key management personnel and senior executives. The Act requires listed companies to put a non-binding resolution to shareholders at each AGM to adopt the report for that last financial year. As I said, the vote's going to be advisory only and doesn't bind the company in any way. However, the board will take the discussion at today's meeting into consideration when reviewing the company's ongoing remuneration practices and policies for its personnel. I now move that the remuneration report be adopted, and I'd be pleased to take any comments or questions that anybody may have in relation to that report or the remuneration policies and deal with it from there. Is there any discussion on the item? Just wait, we'll get a microphone. There we are, just behind you. No, please. Can you please take the microphone? Because we do have people who are on the other end of the screen.
If it is a non-binding vote, why do we vote on it? It is a waste of time in my book, you know, and it happens everywhere, but a waste of time.
Yeah.
Thank you.
I'm glad you asked that question, and you might address that to the Minister for Corporate Affairs rather than us. We're bound by the legislation. It does have some consequences. If there is a succession of non-binding votes, then it can lead to an opportunity for a board spill over a period of 2 or 3 years. But I do take your point on board, and however, it's a regulatory requirement that we need to comply with. So I apologise to you that we have to put you through this. Is there any other discussion or issue anybody would like to raise on that point? If not, the results of the proxies are tabulated on that slide behind me, and this I will declare, I'll call for a poll on this particular item. So can you please get your little green slips of paper out and mark that accordingly. There are no other resolutions to be put at this meeting, so if you'd like to fill that out, and one of the people from Share Registry will come round and collect those green forms, and we'll then tabulate that poll. And while we're tabulating that poll, we'll just finish off the other business of the meeting, and then allow Chris to give his presentation. So I'll adjourn the meeting while Chris is giving his presentation. We'll re-adjourn to declare the result of the poll after Chris's presentation, and we've had a conversation on a few things, and progress it from there. Just 1 second, I think I have to...
Sorry? Yeah.
So while Vanessa's collecting all those, those on the other end of the screen, just bear with us for a minute or two while we collect these green forms, and we'll come back to the main part of the meeting. Is there anybody whose form hasn't been collected who would like to? One over my right-hand side here, a couple here. Oh, here we are, coming round. There we go. There's quite a few to come. Oh, Vanessa, one more. There we go. Is there anybody? One form on the left-hand side there. There we go. Thank you. Good. No more to come in? Thank you. Just before I adjourn the meeting for Chris's presentation, I'll just ask for, is there any other general business that anybody would like to raise? Not part of Chris's presentation, but we can answer questions after Chris's presentation as well in general terms. Mr. Kempton. Microphone, please. There we go.
Yeah, Steve, with all this performance and that, I'm just wondering if there's going to be anything left in the till for a dividend.
A dividend? Well,
yeah,
we hope
dividend.
So. We have, over the last couple of years, we did have an opportunity to pass some dividends through when we had some sell down of assets and we had some cash which was surplus to our current strategic needs. Currently, as I mentioned, we're sitting on around about 37 mil in free cash in the company. We don't believe we have got loose cash available at present for a dividend because there are some plans which are afoot and we may need those funds to meet those strategic objectives. As we have going forward though, and just thinking back historically, we have spent around about $6.5 million in the last 12 months on a share buyback scheme, which is effectively delivered to shareholders about a 1 cent dividend or benefit back to shareholders by the cancellation of those shares under the share buyback. And they were bought back at a price less than, on average, 30 cents. So it's quite a good outcome based off where the current share price is. Going forward for dividends, we are keen to become a dividend-paying and a regular dividend-paying company. We haven't formalised a policy on that as yet. However, the philosophy, I believe, is along the lines that when we start getting a regular revenue stream, we will then be in a position to formulate a dividend policy so we can start paying a dividend on a regular basis. The performance of Mount Marion is going well. At this stage, we are anticipating some free cash to start flowing from that project in 2018 onwards. And from that, hopefully, we can then start paying a regular dividend to shareholders. But we have no commitment on that at this stage, and it depends on the continuing free cash coming from that project.
So no cash from the mine so at this stage, there's been no, on the lithium sales or export?
Oh, there's been plenty of cash coming into the joint venture company, but that
nothing,
company needs a working capital base, and there is the working capital it needs. That working capital is virtually topped up to its requirements now, and so we're anticipating some free cash to come through from that venture to Neometals as a shareholder of RIM, the Mount Marion project, in 2018.
So it sounds like Santa Claus isn't coming.
Santa Claus won't be here, but hopefully he'll be here certainly for next year. Any other general questions or business? And then I'll adjourn the meeting and then pass over to Chris. All right, I'll adjourn the meeting pending the outcome of the poll, and I'll reopen the meeting when the poll results come back. In the meantime, I'll pass over to Chris Reid for his presentation, and then Chris will field any questions that you have on the operations and strategic outlook for the company. Chris Reid.
Rightio, once again, good afternoon. It gives me great pleasure to update you on your company. It has never looked healthier, its prospects have never looked brighter. Well, wrong presentation. Here we go. Rightio, the general disclaimer, you can read that at your leisure. So Neometals, this has been our strategy since we started turning the company around a couple of years ago, and it's worked, and we will continue to prosecute it as our strategy. And that's one, is to develop a portfolio of globally significant resources. We have done that with the upstream lithium project for Mount Marion. Essentially what we try to do is to build up the size of the pie, to add value to the resources, and then we're bringing in partners, very strong partners, to monetise that, to take as much risk out of the business as we can. And that has worked in the lithium, and we'll apply the same discipline to the titanium project. In doing that, we are able to turn those assets into lower risk, long life, high margin operations, which enables us to give money back to the shareholders, right? I mean, we're all shareholders together. The family's the largest shareholder. The purpose of a business is to make money and to give it back. And you should judge your success by giving back more than you take off people. So as a strategy, that's enabled us, out of some sell downs, to return some money back to the shareholders. And we have decided to give some money back via a share buyback this year. And we hope to resume that, Rob. But, you know, when we are looking to bring in partners and negotiate with partners, you have to be in a very strong position. So we kept a lot of cash on the balance sheet this year as Mount Marion was coming into the risky part, which is commissioning, deliberately, so that we were never short on working capital, which we have been before once, and it nearly killed us. So we've deliberately kept that on our balance sheet. Do we have a lot of cash? Yes. Is it more than we need to spend over the next 18 months? Yes. But it makes us strong. And then once we start getting dividends, so Mount Marion is operating above nameplate capacity. It is accumulating a lot of cash. You can see the revenue prices we're getting for the 6% of, you know, 840, and so that money will flow through, and then we can look at resume. We haven't got a stated policy, but as Stephen said, at the right time, when we can measure those reliably going forward, we will develop a policy and subject to board approval, continue that program. So I think we've had a pretty good year for the last financial year, and it's a bit funny because, you know, it finishes in the middle, you have your AGM at the end, you're already halfway sort of into the new one. But I'll tell you what the tactical plan is coming out of that strategic plan for this financial year, and that is to grow the market cap, and our market cap is starting to grow, which has been good. We've added about 100 million market cap since the start of the year. But you know, how we're going to do that is, one, we've negotiated a new mining services agreement with the guys at Mineral Resources, and we're going to upgrade the production at Mount Marion from 6 and 4% to all 6%. Now that will double the value of half of our production. I think Mr. Ellison said that we're getting about 440 for the 4%. That'll go up. So the mine will make more money. We've advanced our lithium hydroxide project with vendor test work and our partner selection process that is underway. Our goal this year is to license one or more of our technologies in the lithium space to an existing producer for royalties. Once again, it is a low risk cash flow, and that's what we're trying to accumulate, is a number of sources of low risk cash flow. We're fast tracking the evaluation of our lithium battery recycling process. When we say fast tracking, speed to market is important, but it is a very complex process, but we are making good progress. And we're going to fast track the evaluation of Barrambie as a direct shipping operation, potentially. We will run the traditional evaluation for Barrambie as an integrated producer of titanium, iron and vanadium. And we're continuing, we've got away our first third-party licensing agreement, and so we're going to continue to try to build up a portfolio of royalties from the technologies that we have acquired and or developed. And so I've rearranged the presentation today because I want you to know that your company is in good hands. We have an excellent board of directors. It's almost like having 4 parents every board meeting and coming back with a report. Oh, yeah, look, there's no shortcuts here. We go through very, very rigorous evaluation of all our opportunities. Everything is very, very disciplined. And the skills that each of the board members have are relevant to our business and where we want to head to. So I thank them for their counsel this year. It has been great. The harder they are on me, the harder I am on myself and the team, and the better the outcome will be in the long run. And we've boosted our executive team at Neometals. We've got Mike Tamlin, stand up Mike, he's our Chief Operating Officer, primarily responsible for the lithium business. We've brought on Darren Townsend, who's already stood up once. So we've brought Darren on. He's a very seasoned project developer, primarily to drive the Barambie titanium project. We've got Jace, who's my long-serving and long-suffering lieutenant, who's been with us for 10 years. He does an excellent job. We've been able to attract Mr. Paul Warwork, who was the trading manager for Iluka, and before that he was a general manager of marketing for Taliesin, or the Greenbushes mine, which Mike was his predecessor a couple of generations before. And so we're very fortunate to attract such a well-credentialed titanium and lithium marketer. We have our general manager for China, Eileen Howe. She's very experienced in doing deals in China, has excellent contacts, so she's up there now trying to deal with some of our potential off-takers. And then we have another tier of consultants, some in the office sort of semi-permanently, some almost permanently. So we have Darren Waits, Darren, you've been with us for about 8 years. We've got Dr. Brian Smith, who's been with us from the day we started. We've got Gordon Kelly next to him, was an ex-consultant. We haven't done any work in nickel for a while. We've got Clay Gordon, Dr. Sharma, and Mike Spratt. And we've also got an excellent back office team that are with us today. We've got Kelly, Jules and Mariana, if you want to stand up. They keep all the back end going. They keep us all being able to do our job every day, which is great, and I thank them for that. We do have significant financial resources. We've got lots of cash. We've got a great receivables and investments portfolio. And we are starting to get recognised by the market, which is fantastic. David's still our major shareholder and very supportive, and we've been fortunate this year to attract the Global X Lithium ETF onto our share register. Currently we are probably about the 20 to 22nd largest investment that they have in the ETF. But as Mount Marion continues a couple of quarters of really good production, we hope that they will re-weight us up. From about the 25th of October, they've bought 15 million shares on market, which has been very, very helpful. In terms of the company, we have a number of moving parts, all in their own discrete silo. As I said, Mike's generally responsible for the lithium business unit. And Darren and myself handling probably more the titanium and the technology business units. That's working well. I mean, we have made the market aware that we will consider demerging the titanium and the technology businesses. I mean, if we're advancing them and not getting value for them, and they're sort of hidden behind the lithium business, we may consider executing that strategy. I have a look at Barambie, and it's got, $50 billion worth of contained material in it, and a technology that we're scaling up to try to get it into the lowest quartile. I mean, we've got to go through a disciplined evaluation, but, in terms of contained metal, that is the most valuable project that we've got. We have a clear focus on the lithium-ion battery commodities. Obviously, lithium and titanium. I'll show you today how lithium and titanium are a beautiful couple. Some people always thought they're a little immiscible, but they make fantastic partners in a battery. And then we've moved and expanded our focus into cobalt, but only so far as recovering that from the lithium batteries. We're wanting to develop multiple positions in the lithium supply chain off of Mount Marion, which is the cornerstone of our business. We're looking to increase our profitability and our scale without increasing the risk. And that's to convert our Mount Marion spodumene in the future into our own lithium hydroxide. The rationale for that is really Mount Marion is making an exceptional margin at the moment. But in a global perspective, we are sort of still in the third, high up in the third quartile. Now, how do we transition that into the lowest quartile? Well, we produce lithium hydroxide and we do it locally. 70% of the world's lithium hydroxide is produced in China. So we have obviously an advantage in the transport, shipping, and what have you. So lithium hydroxide is the next logical step. We've done some R&D to try to value add, not smart enough to do lithium cell production or batteries, but we have lent our mind to developing a process to recycle these lithium batteries. They've got a massive amount of contained value. And so, you know, the underlying strategy is to achieve the maximum value for the lithium units. And actually having a secure source of lithium units coming out of the ground is nothing to be sneezed at. There's only 3 operating lithium mines outside of China, a couple inside China, and the rest are big salt lakes up in the Andes. So trying to extract the maximum value and then recover it at the back end makes the business a lot more profitable and a lot more sustainable in the long term. So Mount Marion, 40 k's outside of Cal. Oh, we've got sound. Now, this was a Mineral Resources video. I've sort of chopped and changed, so if the words bounce around a bit, please accept my apologies. So Mount Marion is processing at about 2.4 million tonnes per annum. This year, the MinRes guys are forecasting about 450,000
Situated 40 kilometres southwest of Kalgoorlie in Western Australia lies the Mount Marion lithium mine. Based on current drilling results, the project has a minimum open pit mine life of 20 years, utilising conventional truck and excavator operations.
And look, I've got to give the MinRes guys credit.
Began the early construction phase of the mine project in November 2015.
As the plant down at Greenbushes.
Constructed in a short time frame of 12 months. And with our team
not
achieving
an easy process to build
475
them.
consecutive injury-free days
It's a
to
less
date,
easy process
highlights
to
Mineral
commission
Resources'
them
ability to
really
rapidly
well.
develop.
These guys did,
Our ability to move
did a
quickly and
fantastic job
knowledgeably
on it.
is the key to our success and attributable to our third shipment, which is anticipated for early April. We are proud of our involvement in the world's largest. Key milestones for the project were achieved through a well-managed process, from initial site development of the greenfield location in late 2000
Rightio, we'll get to the more interesting bit. So the resource just under 80 million pre-depletion. In the first half of this calendar year, we produced 156,000 tonnes of concentrates, which was about 78% at capacity in the first 6 months of startup, which is a fantastic effort. In the September quarter, we produced in excess of 100,000 tonnes, which was nameplate then. The boys have forecast 2018 production at 450,000 tonnes of product. First half EBITDA, on that basis, our 13.8 will give us a bit over $10 million. The pricing and the volumes, hopefully that'll increase next year, but we haven't put out guidance yet. The C1 cash costs and the total costs actually include CapEx. I mean, we never paid for this plant. If you tried to build that from scratch, you're looking at a couple of $100 million. We weren't in a position to finance that. So those costs that you see there actually include capital recovery from the boys from Min. So they're providing a complete mine to port solution, doing a really good job, and now have committed, according to their presentation yesterday, around $50 million to upgrade the plant to produce all 6%. That'll have a material impact on the financial returns going forward. Ganfeng continue to take the product on a life of mine take or pay contract at prices linked to the international carbonate and hydroxide pricing, bearing in mind that we do have offtake options from February 2020 onwards. This enables us to have a look at a WA-based lithium hydroxide project. And this is what the market needs, lithium hydroxide. Any of these new EV batteries where they're trying to reduce the amount of cobalt and have more nickel in it, if you've got nickel in it, you need to have the lithium hydroxide. It's growing at about 16% per annum, so the market for this stuff is doubling every 5 years, which is fantastic. And they need it from outside the West. So that's why you've got Tianji, who's China's second biggest producer, building 2 hydroxide plants down in Kwinana. You've got Albemarle building one, or put their applications in to build it at Kemerton. You've got SQM and Kidman looking to develop one in Western Australia based off a resource out the back of Forestania. And we're looking to have one local in Western Australia too. The main reason for this is security of supply. Now, the Chinese government is not refunding the 17% VAT. So they charge guys 17% VAT on the imports of the spodumene. But if they try to export the compound, they don't get the VAT. So, you know, they're building 60% of the world's battery plants up in China. They want the lithium to leave as batteries, laptops, cars. So as these battery plants that are getting built, you know, last year there was sort of 70 gigawatt hours of battery plants in the world. In 2021, it's just under 400 gigawatts, and the majority of those in China. So we can see that they'll be happy for the spodumene to go up there, not so happy for it to come back. So, you know, the market is telling us that they need lithium hydroxide and they want it from outside of China. So for us, it's low risk, right? The guys at Ganfeng are processing this material at a rate of over 100,000 tonnes a quarter and making the best quality products. They're taking out the processing risk. The financial returns of downstreaming are generally twice those of the mine, but the mine is so much more risky. Not now because it's at steady state operation, but to develop these are quite hard processes. So we want to build a local plant. We've got to use 7 tonnes of spodumene for 1 tonne of hydroxide, so we've got an advantage because the Chinese have got to pay for it to get to port, put it in a boat, get it up to China, pay the VAT. We want to use local gas, sulfuric acid in a workforce, and it's about speed to market for us. So we've got a very disciplined evaluation process underway there, and so God willing we'll look to finish the study and make an FID around this time next year. Our lithium titanate is really a value add to the lithium hydroxide. You basically get titanium dioxide, lithium hydroxide, and then we put it in an autoclave, mix it together, and then we've got a couple of things to finishing off. So the thing with lithium titanate is lithium's generally in the anode with nickel, manganese, cobalt. This is actually in the anode, which is the negative side of the battery, which is where the graphite normally is. Graphite's got a surface area of about 3 square metres a gram, lithium titanate's 100. Charges 30 times quicker. This enables super fast wireless charging, which is what the market needs. Porsche putting it in their Tesla killers so that they'll recharge wirelessly in sort of less than 10 minutes. And if there is a shortage of lithium in the world, we're going to have less lithium in the battery, smaller batteries, but faster charging. So we've done a bit of work in this space. It's getting a little crowded. I think when we put our patents in our applications, there were more than 440 other companies. Toshiba is one of the leaders. Johnson Controls is now supplying these batteries. They're replacing 12-volt lead acid with lithium titanate batteries for start-stop applications. I mean, when you've got the world's biggest automotive battery maker heading that way, it's very comforting for us. We're currently producing sort of kilo samples at the CSIRO and looking to test them in actual battery formats in the coming year. The last part of the lithium business is the recycling. We own 50% of a flow sheet that's been developed by our partners in Canada, where we're renting a laboratory, and we've got the exclusive licence to commercialise this. Less than 5% of the lithium batteries are recycled. I mean, who here has ever recycled a lithium battery? You just put them in a drawer somewhere. But did you know a tonne of those batteries has got about $12,000 worth of cobalt in it? So, you know, there are significant volumes of these being stockpiled worldwide. The Chinese government's stockpiling 300 to 400 million phones a year in massive big warehouses because it doesn't know what to do with them, but it can't throw them out because there's so much cobalt in them. So look, there's a number of companies that are looking at this. You know, why we're in it, because our partners up in Canada were Noranda's ex-R&D team, who are a Canadian base metal producer. And these, apart from the lithium in these batteries, it's all base metals. You know, it's nickel, copper, cobalt. So they've done a terrific job in getting us a flow sheet. and we're now scaling that up. We performed a scoping study this year. We had Sedgman prepare it, and I've got to say it is a very, very, very robust business. So the commercialisation plan is to start wet commissioning the pilot plant in December, run that through to the end of March next year. We've got a lot of interest from all parts of the lithium battery supply chain. You know, cathode makers, battery makers, car makers will be processing batteries that we've bought and battery packs that have been given to us by third parties to prove out. So subject to the success of that, you know, we'll go through the engineering studies. We need board approval, obviously, for an FID, but it's a business that we can be very flexible on. We can have a look at operating it ourselves. It's a relatively small plant. We can look at doing it in joint venture with other chemical companies, or we could just license it. Our sunk investment in this over the last year is you know, probably less than $1 million. And then we get to the Barambie titanium project that we own 100% of. It's the world's second highest grade titanium deposit, open at depth and pretty much all directions other than above the surface. It is a fantastic resource. Clay and Brian executed a program to take 20 metallurgical diamond holes for test work. You know, the average grade is showing that, you know, we're underestimating what the grade is in the eastern band. The problem with the titanium industry, and it's 10 times bigger than the lithium industry, is that there's poor industry profitability. All the big guys have either spun off their titanium projects or they've tried to take over other companies to try to get critical mass. They just generally don't make really good sustainable returns on capital, and sort of case in point is that in the West, there's only been one new plant in the last sort of 15 years. The rest of them have been in China. So for us, the technology that we've got from Canada that we now control is about dropping that cost. So as we've scaled it up, the costs have dropped at increasing levels of confidence, but we have to continue that now, and we'll do that over the coming year or two, which will be to take that through to a DFS after we pilot it. And you know, the secret one is getting 3 valuable products out of the ore and lower costs, which is around a low temperature, low cost acid recycling process. And you could look at me and say, well, you know, what do you know about acid recycling? I mean, I couldn't balance the equation for you, but we have one of the world's leading acid regen manufacturers in Europe who is standing behind this as an OEM. And you know, as we alluded to in our last update, we are evaluating the potential for direct ship ore. These guys up in China, they just keep giving. The government has, and their obsession with cleaning up their country, which is not unfounded, and we would support it, they have shut down 30% of production from their domestic ore bodies like Barambie. They shut down 89 processors or concentrating plants, which has created a fantastic opportunity for us. Obviously, it's a massive mine. We've done a lot of good work. Bill Crossley's here today. He spent years belting that into shape in terms of having all the approvals and having it all drilled out. And so now we've got Darren picking up the cudgel to make sure that technically we can examine it and bring that into operation if we can get the parties to do it. And we've got Eileen and Paul working to make that a reality. So we've done the drilling. You know, we will run we're running currently the pilot scale Benny work out at Nagram. We'll then run the hydromet circuit sort of mid-year next year, and then we'll give the market a bit more guidance on what's next for that. So I guess, you know, as we stand here today, you know, we've got a market cap of about $250 million. I think we stated in our annual report that, you know, our 3-year target is to get up to $1 billion market cap. Now, you know, we are underrated against our peers, and the only other one of these that's in production is Orocobre and Galaxy. The rest are either funded or unfunded developers, and yet we've we're in production and a lot of the risk is out of it. So we continue just on Mount Marion to think we're undervalued, but we've got